Hey everybody, what's up? It's Pete. Welcome to today's episode of today's best stock picks. We're creating a game plan for Monday, April 6th, 2020. If you find these videos helpful, please do me a favor and click to subscribe. You'll get updates and I would really appreciate it. Before we get started, we're going to get into a follow-up question from a member of the community named Jim. And it was essentially about heading into the day and having a bias, whether or not you should be buying or selling versus having an open mind and waiting to see how the market unfolds. I can absolutely see where the question's coming from. You don't want to, if you don't have a bias, you're not only looking in one direction or the other. However, being open minded and letting the market unfold, that's smart from a I'm not right versus the market's not right. So, in other words, you put a trade on and you have conviction and you say, no, the market's wrong. That's not the right thought process. And I want to be open minded to answer Jim's question. So having an open mind that the market can do anything is absolutely yes. That keeps us out of trouble. However, in my experience, which is now 20 years and from real results, having a bias going into the day and saying the odds of follow through, the odds of going up or the odds of going down are greater in one direction or the other. So let's just keep it simple and say the odds of tomorrow, not tomorrow, I'm going to get into that in a second. The odds of a particular day are the market and the stocks are going to go higher. Therefore, I am only going to look for stocks to buy because that's the greater likelihood of what's happening now and what I expect to have happen based on understanding how to read the tape. And I'll give you an extreme example of that. There was a day last week where I went into the day looking for short sells. I believe it was Thursday, and I'll show you on the charts where the market had that short covering rally gap down, and I was looking for the next day for the market to trade lower below 244. And if that 244 level triggered, then I would have been looking for short sales. What ended up happening was the market ended up having finding support at the previous day's low, never triggered below 244, and we actually had a rally for the better part of the first 3 hours of the day. And it was off the oil numbers as well, so there was another reason to it. But because I went into the day looking for shorts, I only was looking for stocks to short, and the market was actually bouncing at that time. So I did nothing. That's my point. My point is I don't fight what I believe is going to happen. And here's the key. Over time, you will become a much greater trader by saying, this is what is probably going to happen today, and that's what I'm going to do. Switching your opinion of the market, switching your bias based on what's going to happen means that you're trading on very super short time frames. Can you do that? 100%. Is that exhausting? 100%, because you're just trading off of the most recent price action. I know a lot of people that make a living doing that. It's not easy. You have to trade a lot, and you have to have super discipline to say, now I want to be long, now I want to be short, now I want to be long, now I want to be short. It's hard to do. In my experience, and what I do is I go into the day saying I want to be long or short, and then look for short-term order flow intraday to confirm my bias going into the day of wanting to be long or short. So, Jim, I hope that answers your question. Your concept is good in that we should expect the market to do anything, but from a trading perspective, a long-term trading career perspective, in my opinion, in my results, it's better to have a bias and trade in that direction, but then trade by trade, say anything can happen and manage your risk appropriately that way. So hope that helped, Jim. What we're going to do now is, ironically, getting into the market today, we're going to go top down, looking at the market first, and then I have a big list of stuff we can take a look at. But what's interesting is the market's consolidating now, and I'm going to go to the charts and we're going to take a look. And by the way, if you have any questions, absolutely leave a comment. I'll get back to you as soon as I can. So heading into the day, in my opinion right now, the way the market is trading, and you notice I actually have not had the moving averages on the charts for a while because we've been the severity of the move to the downside and trading every day with just price action. We've been sticking mostly to the most recent price action. But what you can see here is we're clearly holding below the 20-period moving average. So you can see the moving averages have actually caught up with the extreme volatility. So we can kind of start using a little bit longer time frames now, which is the 20-period momentum type moving averages. And so far, we're holding it as resistance. So far, that's the key, because that's what I want to get into right now. As far as I'm concerned, we're in a 3-day trading range. Now, not necessarily perfectly inside days, but right now you could make a case that this is where price is trading in the SPY, the SPY ETF, right? The S&P 500 ETF. So in my opinion, we are in consolidation mode. And I keep saying my opinion when I'm telling everybody, have a bias. The way I'm looking at the tape right now, the way I'm looking at the market is we're consolidating for 3 days, absorbing all of the news that's coming out, which is still quite negative. In April, the next couple of weeks in April is supposed to be the worst of what we're supposed to see. I hope everybody's safe. Let's make sure we say that first. But from a trading perspective, we're looking for an explosion in volatility out of this trading range. And here's the key: because the 20-period moving average is to the downside and still sloping, the predominant thought process is we should just go into the day selling short. Now, because of the consolidation, that kind of invalidates that now, and we're looking for an expansion in volatility, which means we could break out on either side. So here's how we trade that. And I'm not undoing what I just said before about Jim's question. It's a one-day strategy coming out of this consolidation. If we break to the downside and take out the previous 3 days, which I believe was the 244 level, we can actually just take a look here. Whatever this low here, the low was 243.90. So yes, so below that level. If we break to the downside, let's say we open flat and push lower, which it's still early in the afternoon on Sunday, so we're not sure where that's going to end up. But if we open and push below that level and stay there, the odds are greater that we'll trade to the downside and follow through. So consolidation breakouts always require a little bit different thought process, because it's literally a one-day strategy to capture a trend day that day. If we happen to break to the upside, now you're only trading against with the last 5 days worth of price action. So here's really the point that I want to get across. The longer term picture over the last couple of months is definitely to the short side. We had this short selling rally and we did not sell off yet. Now, technically speaking, we should have had a follow through here and we didn't. So price action's talking to us. So you need to be nimble tomorrow, that if it breaks to the downside, you can be a little bit more aggressive in how long you hold trades. If it pops to the upside and catches everybody looking to the short side, you could trade the longs as long as they're above the opening price and or the monthly and the weekly, which we'll get to in a second. But you would trade it with a little bit less aggression. And when I say aggression, I mean share size, and maybe look to book profits and scale into momentum, as opposed to if we break down and you would look to add on pauses. So if we go to this, so that's the thought process for me tomorrow going into the day. Okay, the greater likelihood is to the short side. If that happens, I'll be a little more aggressive with how long I hold trades and how many positions. If we pop to the upside, I can still trade it, but with less share size. So it's interesting now, we only have a few days in April, but we want to pay attention to what's going on over the last couple of months. And you can see now it's an inside candlestick, obviously on the monthly candlestick, and neutral. So neutral small body candlestick means indecision. So those last 3 days of trading are mimicking what we're seeing on the daily chart, that we have indecision waiting for it to resolve itself. So we have a plan for both sides and how we're going to manage those trades on both sides. So if we take that down to the weekly chart as well, you can actually see that we have an outside candle here 2 weeks ago. And then last week, it wasn't quite an inside candle, but definitely a consolidation. And what's interesting is it was near the high. So we need to take out one of those two areas for us to feel like, okay, here's an expansion in volatility that maybe we could trade and buy something on Monday or short it on Monday and hold for the week. So we'll have a much better picture tomorrow. Hopefully we go well bid or well offered on the weekly chart, because remember, the monthly was still inside. But if we go well bid, higher highs, higher lows, or well offered, lower lows, lower highs on the weekly chart, that will give us a little bit of a heads up that maybe we can hold some of those trades a little bit longer. So if you have any questions about that, absolutely post a comment, and we'll either answer it in a future video or get to it in just the comments themselves. So we're going to get right into it. Some of the stocks from last week that we called out, I hope you took advantage of these. mRNA, we actually called out that it was strong stock with strong close, clearly above the 20. We said it was a mess in this area, but we wanted to see it hold above 33, and right now, so far, it has. We're actually going to look at some stocks on the short side that took out 20-day lows, and on Monday, we're going to look to see if they get follow through for additional short selling that we could take advantage of, or if we break down for the new 20-day lows like we did, and tomorrow, Monday, is an inside day. Generally speaking, if you don't go well offered or well bid on breakout or breakdown and go inside, you get a reversal. So that's going to be pretty interesting to see if a couple of those stocks actually follow through. So if mRNA gives us well bid again tomorrow, and we stay above the previous close and the open, we should be able to trade that with some confidence on Monday. Following up, we also have HRL, also showing well bid for the last couple of days, and 1, 2, 3, 4, 5, 6 out of the last 7 days closing above the open. So some short-term buying, but we need to get above this 49 level, 49.50 it looks like. So above that level, so set the alarm there. You want to keep it in your tracking journal, kind of like what we did in MRNA last week. Dollar General, same thing, set the alert. We see that this level, very strong the last few days, needs to get through this 164, 166 level. You don't want to trade it up into that level unless you have some room to go. If you're a day trader and it opens strong, you do have $4, but from a swing trade perspective, you don't want to take a trade that's 1-to-1 risk-reward ratio. So the better trade for a swing trade is above 166. Day trade room to go, could make the trade with an intraday opportunity swing trade, let it get through that level. Zoom, we actually looked at last week. We were looking for a pullback to get long, and now we have an inside candlestick. I'm looking for this to retrace up to the 160 level with a buy stop above Friday's high. On the opposite side now, we have some weak stocks with weak closes. Okay, that's the name of the game here. And we mentioned it last week that the financial stocks were some that we were short. The only problem now is that these are short with support coming up. So the room to go is not as strong. So these particular stocks that have already gone down a bit, we're looking for them to open lower, bounce, and then put the short sale on, because you don't want to short where the profit potential gets short is tighter. So that bounce is actually still short as far as the bias going into the day and wanting to be short. And you see we got some nice follow through with all these closes below the open. So we're expecting a lower opening, a rally, short-term signal, either a swing high or a bearish U-turn, looking to initiate a new short. Another one we have Win. Same kind of situation. You can clearly see that the bearish order flow is still in place. And by the way, if you're not sure what a bearish U-turn is, that's what this is here. After a momentum move, you trade through the previous trade, come back, close below this high, and close below the low. That's a bearish U-turn, and you can see what actually ended up happening here. So that's another one there. PLNT is another one. Same situation. All these are weak stock, weak close. TJ Maxx is another one. Fedex, which you would think Fedex would be bouncing with the way they're actually getting news, and not. So we actually have a little bit of a more room to go here in Fedex from 109 to 88. So I actually like that one. But again, it's got to meet the criteria. That's a big part of trading too, is make sure that it meets the criteria. Just don't say I want to be short. It has to say, if this happens, I'm putting the trade on. And last but not least, actually what's interesting is Ross Star is weak, while the other one that we were looking at before, Dollar General, is strong. So you got a little bit of a divergence there. Next, we're looking at a stock that had a 20-day breakout that met all of the criteria for wanting to be long or short, as far as average true range and 2 million shares average per day. The fact that it's already doubled in price over the last 3 or 4 weeks, it's probably going to need to consolidate. So this is one that I would keep on your watch list. So what I'm looking for now in the tracking journals, I'm looking for it to consolidate on light volume around this $15 level for a few days, and then looking for another push to the upside. Last week, we actually had basic materials as an industry or sector that was strong. And again, it's only last week. It's not a longer-term picture. We're just looking for some relative strength for the week while the market was trading weak itself. So the stocks that I'm about to call are not necessarily all in bullish order flow, but short-term and specifically last week, they did have some positive bullish signs. So we're going to take a look at that. So each one of these are in the basic material section. FANG, clearly not in an uptrend. However, if you remember a couple of videos that we had back, we had the 1, 2, 3, which is a failed bottom. We made a low, rally, pull back, and then take out that level. That's a much longer term position type trade. And look at all the times that it's closed above the opening price, as well as on some good volume. Friday was an inside day, so you can see we're clearly struggling here at this 31.50, 32 level, which is fine. Again, clearly trading to the downside, right? Clearly longer term. Short term, the sector was strong, and these stocks meet the criteria. But this is an interesting one because it meets the criteria, but the moving average is still clearly down, but price is above it. So you have a conflict there, not an A+ trade up there. But these are ones that relative strength last week, we'll look to see if there's follow through. Next is Nucor, NUE, very similar, right? Also an inside day, but now multiple days for trading above the 20-period moving average. Still trending down, but above, and the sector was strong. And the last one is AEM, all in the same sector. And you can make a case that this is an ascending wedge, if for those of you that do that kind of stuff too. Again, long term, meaning the last few months, definitely bearish order flow, short term momentum to the upside with some good volume and relatively strong to the overall market. So we could be looking at a potential change of trend here. So even if you're not trading it, it's something to keep an eye on for possibly another push up, a pause, and then getting involved. Some of the stocks that we mentioned before that broke to the downside to look for: AAL, American Airlines, new 20-day lows. So what I want to talk about here is actually unfolded perfectly here. So if you notice, this broke down here and then was followed by an inside day, and look at the rally off of that inside day. So this should have shown another well-offered day, and it didn't. So we're looking here. Now we also have 1, 2, 3, 4, 5, 6, 7, 8 days of closing below the open. That's a lot of selling consecutively. So if American Airlines goes inside day tomorrow, I wouldn't be shocked to see over the next 3 to 4 days it actually rallies. If it goes well offered again, the short sale is still in play. Okay. Next we have GSX. Clearly new 20-day lows here, clearly below the 20-period moving average. I don't love this one as much, and I actually put this one into the list as well to show you the difference between, yes, it's below the moving averages. Is it definitely a sell short? So right now you can see that we had this big one day down on Friday, and it's clearly below, and the 20 is pushing down, and it's well offered. So we're starting to stack a little bit of an argument there, and I do like it from a one day if it meets this criteria, but it's not an A-plus trade like something in here would be for any one of these longs, okay? And last but not least, on the new 20-day low list would be Kohl's. And Kohl's actually traded into an indecision candlestick on Friday as well. So despite the fact that it made new 20-day lows, I do still like it as a short if it makes new lows and holds lower lows and lower highs and is trading below the opening price. If it starts to trade above the opening price, pull the plug. If you put the trade on in the morning for the right decision and you're looking for another push down, fine. But if the criteria is no longer there, very easy to say if it gets above this level, I'm out, put the trade on. Now, the reason I want to also talk about these is the fact that they've been down this many days in a row. So in this situation where you're talking about maybe the 5th, 6th, or 7th day in a row to the downside, it is a little bit more prudent to wait for a rally to sell short if you want to get short. So maybe it might open low or rally, wait for it to get back below the open, or maybe you see the hourly candlesticks positively negative and clearly well offered. So you got to add the situation there. But generally speaking, when it's that many days in a row, the odds of follow through are less. So that's why I'm looking at both sides and making a game plan for both sides. Because we said the market itself was actually trading inside and we're looking for an expansion in volatility, and we could break in either direction, I just want to point out a few other stocks that are matching the market. So Boeing as well, inside candlestick, Schlumberger, SLB. Oh, oops, if I type it in right, SLB. Inside candlestick as well, sitting right on resistance there on the 20. We also have Nike, really big inside candle there, which I guess that's an oxymoron as well. Caterpillar as well. Caterpillar is pretty interesting here. We've actually called this out. Look at, again, reading the notes in between here. Look how many times it closed above the open. That's showing some strength in there despite this. And now we're comfortably above here. This actually is interesting if it breaks above that level. Next we have UNH as well, inside candlestick, looking to the downside there. And last but not least is Home Depot, another inside candlestick. So quite a bit to look at on the long and short side today. Some of the longs need to get above that level, put them in your tracking journal. I am looking for MRNA to the long side tomorrow. I'm probably going to wait for the market to tip its hand tomorrow and break out of this 3-day range before I have a little bit stronger bias, long or short. Obviously, I'm leaning to the short side because of the last couple of months, but price action doesn't lie. If we're going to be tape readers, we have to take what the market is showing us and trade what's available. And if it trades against your bias, in other words, if the market rallies tomorrow, I'll be leaning on those stocks that I came into the day looking for a long bias or situations to buy. Don't neglect those inside candlestick breakouts. Very often they lead to 2 to 3 day trends, and especially the day they break out. If they break out and hold, those are really some easy trades to hold to the close. And if they're clear, they've been holding for a few days into the end of the week. So we're getting a little bit more into some swing trading ideas finally, where we feel like we can be a little bit more comfortable making some longer term calls than just what we're looking at intraday, right? So anyway, that's the game plan for Monday, April 6th, 2020. If you have any questions, absolutely leave your questions below. If you want to have a healthy discussion about some setups, I'm all for that as well too. And please, if you like the videos, absolutely click down, subscribe, and you will get the updates by email, I believe. Have an awesome day, everybody, and please be safe. Let's get through April where everybody does what we're supposed to do, and we flatten that curve, and hopefully life gets back to normal as soon as possible. Have a great day, everybody.